All right, let's talk about two of the biggest expenses in anyone's life, healthcare and housing. It turns out these two giants of the American economy are on a collision course, and we're going to get right into why.
So let's just cut to the chase with the big question. Could your health insurance bill actually stop you from buying a house? It sounds dramatic, I know, but for millions of people, this is becoming a very real and very scary possibility. We're going to break down how the crazy cost of just staying healthy might be the single biggest roadblock to owning a home today.
So, what's kicking off this whole conversation right now? Well, in Washington, Congress is trying to figure out if they should extend the Affordable Care Act subsidies. Now, if those subsidies go away, poof, millions of people could see their insurance premiums spike, creating a massive new hurdle in the housing market almost overnight. And let's be clear, this isn't just a problem for people trying to buy their first home. A sudden jump in your monthly bills could absolutely stop you in your tracks if you're saving for a down payment, but it could also push people who already own a home right to the financial edge. Now, to really get our heads around this, we're going to lean on the insights of three top economists who are watching this whole thing like a hawk. Their analysis is really the foundation for everything we're about to cover. Okay, so let's start with the most direct hit, the squeeze on your wallet. I mean, it's simple math, right? When a cost you absolutely have to pay, like healthcare, goes up, well, that money has to come from somewhere else. Danielle Hale from Realtor.com just nails it here. And that somewhere she's talking about? For so many families, it's the money they're desperately trying to save for a down payment. You know, the dream of owning a home lives in that extra money in the budget. And that's the very first place to take a hit. And what I love about this chart is how clearly you can see the problem. Look at that healthcare slice getting bigger. It's not like it's creating new money out of thin air. No, it's literally eating away at the savings slice. It's a zero-sum game, and right now, savings are definitely losing. But here's the thing you really need to understand. While that whole ACA subsidy debate is what's making headlines, this problem is so much bigger than that. This budget squeeze is hitting pretty much everyone with health insurance in the US. Just let that number sink in for a second. $27,000. That's the average cost per year for a family to get health insurance through their job, which is how most people in this country are covered. That's like a car payment or a college tuition before you've even paid for rent or groceries. It's massive. And you can see on this chart just how fast that cost has exploded. In just the last 10 years, the price of these plans shot up by more than 50%. That's a huge jump that, let's be honest, most of our paychecks have not kept up with. So what's the long-term damage of all this? Well, a study that Emma Freer pointed to is pretty shocking. It calculated that between 1988 and 2019, rising premiums basically made $125,000 in potential family earnings just vanish. And to put that number into perspective, think about this. For a lot of those years, $125,000 wasn't just a down payment. In many parts of the country, it was the entire price of a house. All that wealth that could have built equity, built a future, gone, eaten up by rising premiums. So, we've been talking about how hard this makes it to buy a home. But what about the danger of losing the one you already have? Because this isn't just about saving up anymore. For a lot of people, it's about just trying to stay afloat. Daryl Fairweather from Redfin points out something really chilling. She says this reminds her of the years before the 2008 housing crisis. Back then, a huge reason people lost their homes wasn't just bad loans. It was that they had a life event, they got sick, and suddenly they were buried under a mountain of medical bills. And don't think for a second this is some ghost from the past. The Consumer Financial Protection Bureau confirms that right now, today, medical debt is a huge barrier. It's the reason thousands of people get their mortgage applications rejected year after year. To really grasp how deep this goes, you kind of have to zoom out and look at the bigger picture. Because this tight, scary link between healthcare costs and losing your home, well, it turns out it's a uniquely American problem. This table tells a simple but pretty shocking story. On average, we Americans pay roughly double what people in other developed countries like Germany or the UK pay for healthcare. And what do we get for it? Often the health outcomes are similar, or sometimes even worse. That extra cost is what's putting the squeeze on American families in a way people in other countries just don't experience. And this whole situation is especially tough for certain people. Think about entrepreneurs, gig workers, freelancers, even real estate agents themselves. They have to find insurance on their own, their income can be all over the place, and when those premiums keep rising, it makes it incredibly hard to prove to a bank that you can afford a mortgage. It's a really vicious cycle. So, where do we go from here? The problem is pretty clear, right? But the solutions? Well, that's where things get really complicated and the debate gets intense. So, here's a quick, just the facts look at where things stand. Congress is in the middle of this debate over the ACA subsidies. The White House, well, they had a plan, but they've hit pause on announcing it. And then there's been some talk about another idea, sending money, quote, directly back to the people. But what that actually means is, frankly, still pretty unclear.
At the end of the day, it kind of boils down to two big competing ideas. On one side, you have the current strategy. Just keep using taxpayer money to help people pay for really high insurance prices. But on the other side, you have analysts like Emma Freer who argue for a totally different path, using the government's power to actually step in and bring the prices themselves down.
But if there's any kind of silver lining to this whole mess, it might be this. Danielle Hale points out that the urgency of this subsidy debate is forcing a national conversation. It's shining a huge spotlight on the crazy high cost of healthcare and how it ripples out into every single part of our lives. And that really brings us to the big final question, doesn't it? For generations, the American dream has been tied up in the idea of owning a home. But if the cost of just staying healthy puts that dream out of reach for more and more people, what does that mean for the future? It's a question that policymakers, and really all of us, are going to have to answer.